What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is we're going to be taking a look at the Ortex data and the price action that we've been seeing on AMC over the last trading week and try to figure out where we could see a couple of these numbers go over the course of the next couple of weeks and how that is going to affect us as AMC shareholders. Now, we talked a little bit about the option chain in yesterday's video in terms of how this monthly options expiration date is slightly different than any of the other ones that we have seen, but we didn't really go over the specific price levels to where we could see a significant amount of delta hedging. So we're going to go over that as well. We have some real good fundamental news to talk about with AMC. And we also have a really important event coming up where it's kind of going into the wild, wild west. We know what happened with AMC's last earnings when Adam Aron announced that Say platform. He announced some really good things in the earnings call. And I think there is going to be a lot of what I'll call good uncertainty going into the earnings call that should be happening in the very beginning of November. And in addition to this, we're going to be going over something towards the end of this video that I think a lot of people are confused on, are interested in, and just really want to learn more about. And that is going to be this concept of computer share. Now, this is going to tie in to a lot of what we have been seeing over the last couple of months, especially since June. We saw that big June run up, and a lot of people thought that that run up was going to be it. That was going to set off the squeeze, and that was going to be that. We were all going to make a bunch of money, but that is not actually what ended up happening. As you all know, we closed the after hours trading period on Friday at $37.38, pretty far off from the all-time highs of $77 a share. Now, there's been a lot of talk about catalysts, and we all like to talk about these catalysts, especially the fundamental ones and some of the more speculative short squeeze catalysts and how they are going to affect us. But again, if you guys have been watching any of my videos over the last couple of months, especially pertaining to these proposed rule changes, in my opinion, there's not really going to be one specific thing that is going to be setting off this massive squeeze. It is going to be a culmination of events coming together, working in concert, that is going to basically force the over-leveraged shorts hands into covering these short positions. But we are going to go over how computer share is beneficial to us and address some of the uncertainties that are surrounding this type of platform. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you guys hit that subscribe button. So when we come over to the Ortex data right here, again, short interest still very, very high, slightly off of the all-time highs that we saw above 21%, but 20.28% is still very, very significant. Remember, I really want to keep hammering this point home that the estimated short interest as a percentage of the free float when we ran from about $10 a share all the way up to 77 was in that 16 to 17% range that we are seeing right here. At the current time, we are hanging out and consolidating at a much higher price with a significant amount of higher short interest, meaning that this next price run up that we are going to see whenever it may come is most likely going to be a lot more aggressive. Now, I know a lot of people really understand the concept of a gamma squeeze right now, but remember, the key thing that we need to think about going into this week is that there isn't a fully built out option chain. It only goes out to this $95 strike here, and that leads to the possibility of a lot more concentration on the option chain. So let's take a look at where this concentration is at the current time, and most likely we're going to see this open interest continually go up throughout the remainder of this next trading week. So we have $40 and $41 a share, a little bit at 42. So you're going to see a theme that they're kind of blocked off in strikes and price levels of threes. So we can see 40 through 42 has a decent amount of contracts, and then we see 45 right here, 44 has a decent amount, so 45 through 47 has another decent amount of contracts. But again, since people aren't going to be able to be gambling on those deep out of the money options this week, we are going to see some more heavy concentration. Now, here's where we're going to get into AMC's earnings call. So we haven't gotten a specific set in stone date yet, but usually these reports, when they come out with these estimated dates, are usually within a week before or a week after when we would see the actual earnings call happen. last time that AMC reported their earnings, when we all left that call, we were all incredibly excited about what was said by Adam Aron. He said a lot of bullish things about the fundamentals of the company, potential partnerships, and where he wants this company to head in the future. And there were a lot of wild cards that were kind of thrown at us that we didn't necessarily expect, especially that Say platform where we all got to ask questions and we got a little bit of insight into the potential of how many synthetic or counterfeit shares could be out in the market at the current time. Now, what's going to happen with this one? We don't really know yet, but I'm very, very excited to see what Adam Aron pulls out of his toolbox to really show us and excite the retail investor movement going forward after this call happens. Now, moving on to some very, very quick fundamentals. I know a lot of people don't really care about the fundamentals of AMC at the current time in terms of the short squeeze play. Now, we've been over this in the past, so we're not going to harp on that point any longer, but No Time to Die, Daniel Craig's final Bond film, opens to $56 million at the domestic box office. Now, the estimates and the projections were that Bond was going to do about $60 million, so about $4 million off. That's not really a bad sign because what we have to think about as well is that Venom is still pumping in the theaters at the current time. We have multiple movies doing really, really well, so they are going to be competing with each other. But overall, the box office numbers have been very, very strong recently. So let's get into this computer share situation. So the main thing that you have to realize about computer share is it gives you actual ownership of your shares. Right now, if you are not on computer share, your shares are essentially being held in the Depository Trust and Clearing Corporation. So there's been a lot of conversations about the lending of shares. Now, how this works in terms of what we are dealing with on these brokerage platforms is that we are getting a fancy smancy IOU from these brokers, and the actual shares are being held in the DTCC. Now, when you turn off share lending, your shares shouldn't really be able to get lent out and basically used against your own position in your actual account. But I have seen firsthand with other positions in the past that I had a cash account and somehow I was receiving interest on my shares being loaned out. It didn't really make a lot of sense. It is possible that that pool of shares in the DTCC is being loaned out consistently, which is why we can see these situations keep happening where stocks get overshorted. They can basically spoof their short interest to make it look like the short interest isn't as high as it actually is and overshort these companies into the ground. And computer share really does get around this. Now, what a lot of people are really worried about with this, the main concern is the ability to sell. So we have this Q&A section right here, and we're going to go over something else as well. So can I buy or sell my securities through computer share? As a transfer agent, it is not within our capacity to purchase or sell securities on behalf of an investor. We suggest that you contact your investment dealer to trade your securities and manage your investment portfolio. But when we come over here, this is another kind of FAQ section from computer share. How do I sell shares? You may sell all or a portion of the whole shares of stock in your CIP account at any time. But here's the thing. They only have a market order or a batch order system. So the batch order, it could take 5 business days to actually settle. The market order should be relatively instantaneous. But we've talked about the risks of using market orders, especially in the times of a squeeze scenario. The price is going to be incredibly volatile, and it is slightly more risky to use the market order versus the limit order when you are trying to sell. And nobody is really thinking about selling right now. In my opinion, the people who are really hardcore into this community are really not thinking about selling their position until the shorts cover. So this market order function could potentially have some adverse effects in terms of the actual fill price that you would be getting, but you still would be able to sell. So when thinking about this whole computer share situation and directly registering your shares and how it could potentially lead to some sort of pressure getting put on these institutions, I really want to give you guys my own personal opinions on this. For me, I am very, very neutral on this whole situation. If you guys want to go out, directly register your shares, get that actual ownership in your name on your shares, potentially expose the counterfeits and synthetics, and potentially basically prevent your shares from getting used against you when they shouldn't be in the first place, by all means, go for it. But if you don't want to and you see that there's some other risks that you are just not comfortable taking, then don't. It is perfectly fine. But what I do not want to see is all of this infighting in the community and people taking jabs at each other over this situation. Again, in my mind, there really isn't going to be any one thing that is going to be setting off the squeeze. Like I've said before, it is going to be a culmination of events that is going to continuously put pressure on these institutions to eventually having no choice but to cover their shorts. Now, here's also what I want to mention, because again, there are both sides to this, and another reason why we really don't need to be fighting about this. And if there's enough people that want to do this and enough people that don't, it really doesn't matter. The same result is achieved. Think about what we have been saying for a while on this channel about the potential squeeze catalyst. Remember, I like to compare AMC to Volkswagen and GameStop to Overstock just because of what set off those two original squeezes. For Overstock, it was that crypto dividend, and for Volkswagen, it was the disclosure of ownership. So when we're looking at this computer share situation, and we are correct, let's assume that we are correct in our assumptions and research that there are a crazy high amount of counterfeit and synthetic shares out there that apes are holding. It doesn't take that high of a percentage of everybody's portfolios to get directly registered, get the float plus the current basically exchange reported short interest on computer share, and then still have shares that are off that platform to basically just say, hey, something is wrong here. This should not be happening. So I think there is enough information out there right now and due diligence about computer share for all of you guys to really go out and make your own decision. If you are on the side, again, of putting your shares on computer share and directly registering, awesome. Good for you. Go for it. If you are not, perfectly fine as well. There are enough people on both sides of this situation making compelling arguments where, to me, it is really just either bullish or neutral at the current time. So that is going to wrap up this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I'm trading and which strategies I am using to trade them. So I hope you guys are having a great weekend, and I'll see you guys in the next video.